Hello and welcome everybody to S&D SMC. So in this video, I will be talking about how I select the zones and how I select the zones on higher time frame, considering the market structure, liquidity, okay, and supply demand concept. So let's just start again. So whenever in a bullish trend, whenever price make a higher high, higher low, higher high, higher low, and takes out some sort of liquidity, okay, and then give a some sort of structure break towards the downside, okay. So that high which has taken out the liquidity, so I will select that high as my point of interest, okay, or zone, and there will be something around the hidden base near the breaker block. I will select that as my point of interest for sells, and you will find some sort of liquidity around here just below the hidden base. So I will consider that liquidity as a form of inducement and market, and this will be another zone for me, okay. So considering the supply demand concept, whenever price makes a higher high, higher low, higher high, there is a form of base, you see, like rally, base, rally. So this base can be considered as a strong zone for buys. So what market will do, they will probably come here, mitigate this zone, and can go again. So same thing for sells, you see, same thing for a bearish market. Market makes lower low, lower high, lower low. So there might be another base, you see. So market can come again here and drop from here. So that is how the smart money concept and supply demand works together. So basically choose those areas which has taken out liquidity. Just for instance, if price making lower low, lower high, lower low, lower high, lower low, lower high, lower low, and higher high. So you see this higher high has taken out all those liquidity from here, all those liquidity from here. And if that high has taken out the last low, so that will be a form of BMS. So that will be considered as a BMS. All right. So what we can do, we can look for that high uh, which is responsible for the BMS and which has taken out the liquidity. So this high has been taken out all those liquidity from here. Okay, from here as well. And after taking out all those liquidity, what we have, this has given a nice breaking market structure towards the downside. So this last high can be considered as good sell zone. So market can probably come here and drop from this zone. So that is how we look for the strong high, strong low as well. And same thing for bullish market, when a price makes a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and takes out some sort of liquidity. Like you see, this is some sort of trend line kind of liquidity here. Market just came inside and taken out this liquidity, and it has given some sort of BMS towards the upside. Okay, so after taking out all those liquidity, what happened here? It has given a BMS towards the upside. Okay, so this last low, which is responsible for liquidity grab, so I will call this as a liquidity grab as well. Like I just explained in one video what exactly liquidity grab is. So I will select this low as my point of interest, and I will probably look for buys here. Okay, I will probably look for buys here, targeting the highs. Okay, and my stop loss will be just below this last low. So that is how you can consider the choosing the point of interest and zones in market, in the trading market. So those are the most powerful thing. Like you should always select the zones before entering the market. Like if you are analyzing any pair, just go on 4-hour time frame. Just go on 4-hour time frame. Mark your zone for on 4 hour. Then go on 2-hour time frame. Then mark your zone. Then same thing on 1-hour time frame. Then refine your zone on 1 hour time frame, which you have marked on 2 hour and 4 hour. And same thing, just go to 30 minute to 50 minute and maximum to maximum 5 minute if you are that much mm, if you have that much understanding of the market. So you should always do this type of refinement, because refinement will help you having a very small risk and good reward. So like if you are this, you see, this is a risking here 1% and getting 7.7% in this trade, and in here what we have, risking only 1% and getting 17% reward. So that is how, like, you should always wait for market to come around your zone and look for buys. So probably you can, if you are risking like one lot on it, if you will risk like if you are risking $100 in one trade, so if your stop loss is like 10 pips, okay, so just go with 0.25 lot with limit order and rest after confirmation. Okay, so like you see, if your price came inside this zone, so you have 0.25 lot as a limit order and can give a nice structure break towards the upside. Then again, what you can have your entry again here with risking 0.75. So price might come here again and can give a nice reaction towards the upside. So if you don't have, like, if you don't put your limit order, you might lose, like you might miss the trade. So it is better to risk some amount of your account size. So that is how I was talking about. That is how I select the zones. Like always select the zones which has taken out the liquidity, okay, and given a nice BMS. So, and yeah, so that is, it is what it is. So let me just go on the time frame. Let's see. Like you see here, price meter lower low, lower high, lower low, lower high. Okay, so this was some kind of trend line kind of structure here. So this one has been taken out by this last low, this low. So I will select this low as my point of interest, but this also has made some sort of liquidity by making some equal low. But this can be a good high probability zone, because just above this zone we have some sort of imbalance here. So market always look for inefficiency like FEZ and liquidity to move. So price might come here again and can buys from here. So that is how, like, we have some sort of breaking market structure here as well after taking out this liquidity. So this can be a good buys. So let me just go on 4-hour time frame and mark the zones, like this explain you. So you see this high and this low. Okay, so this high has taken out this liquidity and this liquidity. Okay, and just for instance, if this high, after taking out this liquidity, you can go on 2-hour time frame. So on 2 hour, what you see, like price making a higher high, higher low, higher high, higher low. Okay, higher high, then lower low, then another lower high, then another lower low. So what we have here, we have a nice breaking market structure here towards the downside. Okay, so and this last candle has taken out the liquidity. This last candle has taken out the liquidity from here and here. So you see, just below this candle, you might see some sort of fair value gap as well. This might see some sort of fair value gap as well. So this can be a strong zone because uh, all those type of highs, all those highs and lows which have some sort of liquidity around it, so that will be considered as good supply and demand zone. So I will select this zone as my point of interest. Okay, so market can probably come here and can drop from this one. And I will not select this one, this high, because this has made some sort of equal lows, and just above this one, this high, we have little fair value gap, and above that one, this candle has taken out liquidity. So I will not select this order block as bond of interest because this will work as of inducement. And same thing here, you see, I will not select this whole zone because you see market broken structure towards the downside on 2-hour time frame, and we have some sort of fair value gap in here as well. But in this zone, we don't have any fair value gap, so I will not select this one as my point of interest. So let's just go on 50-minute. Let's see if we have something here. So that's for this one, and let's go on another pair. So what we have on USD. So see, Euro USD, this high. So this last low has taken out this liquidity. Okay, this last low has not taken out this liquidity. As it said, liquidity taken. So sorry, this last low is not taken out this liquidity here. And what we have here, we have this base, just around the breaker zone. So I will select this base as my point of interest. Okay, and just below this base, what we have some sort of inducement in here. Okay, so this will work as inducement. So this will work as inducement, and we have some sort of liquidity in here as well. So I will select this base as my point of interest if price comes in here. But why not this one? Yes, I will select this one as well because this is the last zone which is responsible for the breaking market structure in here, and price never filled this zone completely. As you can see here, we still have some sort of imbalance left, just little bit imbalance left here. So I will select this zone as well as my point of interest. So this too will be a good zone because always select those zones which has taken out liquidity and the zone which is around the breaker area. So that is how you can select the point of interest. And let me just go on another pair for you. So this is JPY 4-hour time frame. So on 4 hours, we don't see anything else, I think. But on yeah, here we have this zone here, but we have no fair value gap left here. So I will not select this zone as my point of interest because always choosing the point of interest, you must have the information about fair value gap, because if there will be no fair value gap and only liquidity, so price might not come here and tap this zone and drop. It might take out this high as well. So on 2 hour, at this point of interest, like this zone has not taken out any sort of liquidity, so I will not select this as a point of interest, and I will go to lower time frame, like 1 hour time frame. And same thing on 1 hour time frame. You see this candle, we have some sort of fair value gap in here on 1 hour time frame. So I will select now this zone as my point of interest. Okay, and 1 hour, and below this one there is no any candle which has taken out, like this has taken out liquidity, this has taken out liquidity, but we don't have any fair value gap around here. So I will just go on lower time frame, like 30 minutes. Okay, so you see price made lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. So we have a nice break in market structure in here towards the upside. So what I will do again, I will select the last candle which is responsible for this break on market structure. So this can be a good one, and I will go on to what time frame to find a candle around it with some sort of fair value gap. Yeah, this candle has this last bullish candle has some sort of fair value gap just above this one, you see. And let's just go on 500 time frame. So you see, this is the last candle. Just above this last candle, we have some sort of fair value gap here. Okay, so I will select this zone as my point of interest here. So probably market can come here and mitigate this zone and can go upside. So that is just about the how I select the zones. Like I will wait for market to come here and give some sort of reaction, then I will go for any trade. But I will open probably 0.25 lot as my, like 0.25% of my risk as a limit order. So that's for this video. Hope you enjoyed it. Thanks for watching.